This is podcast of Slow Compounding. Through this podcast, we try to provide you real-time information that is sometimes clouded by market noise. We try to present valuable lessons that may help you to be a better investor. Hope you will enjoy listening to this podcast. Hi guys, let us talk about Aarti Industries. If you are following our channel, you probably know that earlier in a podcast, we have actually talked about Aarti Industries. Actually, that was not the business analysis of Aarti Industries. That was just to illustrate the point. Sometimes the market sentiment and the reality could be very far. Just to illustrate that point, we talked about Aarti Industries. So today we are going to talk about why we have not invested in Aarti Industries. So let us go one by one. Obviously, you have seen that Aarti Industries has grown a lot in the last decade. So it was a very small chemical company. Now the way it has grown, we see that when we talk about any chemical company, it's very important that we talk about Aarti Industry. Now the things has become like this. If we do not talk about Aarti Industry when we are talking about chemical space, the talk remains incomplete. So Aarti Industries has grown that much. Now what Aarti Industries does fundamentally, probably if you want, we can make a separate podcast. But today, since we are talking about why we have not invested, so we will just touch upon just few key fundamentals that we need to keep in mind. So first of all, Aarti Industries is working on chemical space. Almost 83% of the revenue is coming from specialty chemical business, and next 17% is coming from their pharma business. If you're tracking Aarti Industries, you probably know this business is going to be demerged from the Aarti Industries overall business. So we see there are a lot of interest on Aarti Industries. So we will just touch upon each and every point, and then why we have not invested, even though we have understood that there could be huge growth coming up on this company for the coming days ahead. The first thing that you are going to hear that Aarti Industries has done a huge amount of capex. To put it, what is huge amount of capex? If I say that in last 2 years, Aarti Industries has spent 25 billion rupees in the capex. That means 2500 crores of rupees Aarti Industry has done capex. Now, this number may not make any sense to you because we are talking in billions. So let us even break down further. If we see the capex that Aarti Industry has done in last 5 years, let us see what is the CAGR. In last 5 years, Aarti Industry has made capex at 23% CAGR. Now again, we have to give the context. What is this 23% number and how exactly this 23% number stands with other competitor? Let us take SRF Limited. SRF Limited is also a company which is working on mostly fluorescent chemistry. Now in last 5 years, they have done capex at a rate of 16%. Let us take another company, UPL Limited. UPL Limited has also done capex at a rate of 16%. So if I have to compare Aarti Industry, SRF and UPL just to understand how much capex has gone in Aarti Industry, we will put this way. Aarti Industry has done 23% when SRF and UPL has done 16% CAGR capex in last 5 years. So now you can understand the rate at which Aarti Industry is doing capex, right? Now, whenever you do capex, you need to put money to a plant, right? So when you're doing it, you need the money. Now for Aarti Industry, there is no free cash flow in last 5 years. And we really do not think that Aarti Industry will have any free cash flow in coming 5 years. They have clearly given the plan for the capex for next 5 years. So the amount of capex they are going to do, it is even more than what they have done earlier. So when there is a huge need of capex, they need to put capital. And if they're not having the free cash flow, now how exactly they are going to put more and more capital? Obviously, they need to either take loan or they need to do equity dilution, right? Now, there is nothing bad when a company does equity dilution or if it takes loan to do capex. But one investor has to keep in mind how exactly the capex will be funded. Always, it's a very important point. Earlier, we have seen that Aarti Industry has raised money from the market through the QIP. Just for your reference, when the first QIP came, it was around May 19. If we go back to that time, most of the companies globally were giving weak guidance. But during the QIP, Aarti Industry was giving a very strong guidance of 15 to 20% growth after the QIP. So what happened just few months later, I think it was probably August 19, the management revised the guidance. They said that the market is softening. That is why it may not be possible to grow their revenue at 15 to 20%. So that was for the first QIP. Now let us look at the second QIP, which happened last year. June 2021, they have conducted their second QIP. They have raised money from the market for their capex. Again, this time also, the management has given very aggressive guidance. From 2021 to 2024, company has given the guidance of the profit growth of 1.7 to 2x. So profit growth 1.7 to 2x in 3 years. It is really a very aggressive guidance. Now many of you already understand just profit growth is not sufficient. The profit should grow with good set of parameters. For example, their return on equity should also be higher if they're growing their profit. Then only it will benefit the shareholders. And since the Aarti industry has been doing heavy capex, their gross block will also be higher moving forward. So if you see their return profile is not that attractive at this point, and because of the aggressive capex they are going to do, their gross block will be higher. If the gross block is higher, the capital employed will also be higher, and that will probably suppress the return on equity even further. Now also we need to keep in mind that the capex they have done in last 2 years has not fructified yet. So the gross block will keep getting higher if they cannot monetize that as and cannot utilize that effectively, right? Now with this guidance, the street is already expecting revenue growth as per the management's guidance. That is 25% revenue growth with 30% of the profit growth. Since the guidance was not made for the first time during the first QIP, we will not take this guidance seriously with confidence. If it fails to meet 20% revenue growth and 30% profit growth, we actually may see the stock remaining flat for longer. At the current market price, we already see the growth rate the management has given already been factored in. If there is any deviation from the guidance the management has given, obviously the market may react and we may see that in the share price. So now the condition is like this. When we are buying Aarti Industry at this price point, we are trusting on the management's guidance, which is 25% revenue growth and 30% PAT. So at this price point, it seems that the market has already factored in the guidance. If there is any deviation from the guidance, that will create a negative sentiment on the stock. So what we will do, we will wait for 3 years and see if the management can walk the talk. And if that happens, it will give us a lot of confidence to think about this company with confidence. Now, just to summarize, this company, Aarti Industry, we do not see any possibility for the cash flow coming up for next 5 years. That is because the heavy capex they are doing and their return on equity is already suppressed. Because of the more capex, what may happen is the gross block will go high and the return ratio will go even lower. That is quite a possibility. Just not that, the guidance that the management has given, the market has already factored in the current price point. The execution has to be really strong, achieve the target. Previously, I have seen that the management could not deliver, so we will remain patient for Aarti Industries and keep tracking their quarterly result. There is one more concern for Aarti Industries that we will share only for our Telegram channel members. We will put another recording for those members. You can join in our Telegram group by checking the description that you see below the YouTube description box. I hope that gives you a fresh perspective for Aarti Industry, why we haven't invested. Just not that, instead of Aarti Industry, we have invested in a chemical company that we have already disclosed in our portfolio update. Every single month we give you portfolio update. You can subscribe to our channel to stay updated and see our portfolio in a continuous basis. That's all for today. Thank you for listening. Thank you for listening to this podcast. I hope you find it helpful. Catch you very soon. Thank you.